Hello and welcome to this special report at XM.com. I'm Maria Pachordiz, and joining me is investment analyst Marios Hadjikyriacos. We'll be discussing the upcoming U.S. presidential election and the potential reaction in the markets. So, Marios, in a little less than 2 months on November 3rd, American citizens will head to the polls. Many believe that the race between Biden and Trump is too close to call at the moment. Let's begin by discussing the complex U.S. voting system. In a nutshell, how does it work?
Hello, Maria. Well, complex is a very correct word for it. So how does it work? It's an indirect system. That means that when people go to the polls to elect their president, they are actually voting for a group of people called electors. And it's this group that actually elects a president. Now, each US state gets a certain number of electors based on its population. So the more populated the state is, the bigger say it has over who wins. Now, the crucial part here is that it's a winner-take-all system. That means that whoever gets the most votes in a state becomes the candidate that state officially supports and therefore receives all of the votes that state has to offer. So in other words, it doesn't matter whether you win, let's say California by 51% or by 99%, you still get all of the electors California has to offer. Now, another key point is that it's not just about the president. This will also be an election about Congress. And Congress is in the US, it's crucial who controls it. Because for something to become US law, it has to be drafted and approved by both bodies in the Congress, the House and the Senate, and then the president has to sign on it. So that means that if any of these three bodies disagree, that law doesn't pass. So each of these bodies essentially has veto powers. What does that mean? It means that even if Biden wins the White House, for example, if he doesn't also win the Senate from the Republicans, he won't be able to implement his agenda. Most of what he proposes will just be vetoed by the Republicans. So it's very, very crucial who controls Congress. Now, the final leg of that is that it's not all states that matter. Some states are loyal to one party. So, for example, California has been won by the Democrats since 1992. The same thing is true for Texas by the Republicans. So it's only a few states that really matter in this race.
Okay, so since the battleground states matter most, are general opinion polls basically pointless?
I'm afraid they're almost pointless. Yes, one might argue that. So why is that pointless? Because, nationwide opinion polls will take into account how they're not reflective of the overall mood. What really swings the election one direction or the other are the so-called swing states or battleground states. Those are a dozen or so states in the middle of the country mostly. The most important of those is Florida, and they're so crucial because they're not loyal to one party or another. They change between parties. So for example, whoever won Florida went on to win the White House in every race since 1964. So nationwide opinion polls can be inaccurate, but the polls for so-called battleground states are extremely important, and it's what people should pay attention to, in my view.
Okay, and finally, what are the key differences between each candidate's flagship policies? And how might markets react to a Biden win versus a Trump win?
Let me start by saying that it's very important for the market reaction. What's most important is who controls Congress. So even if Biden wins the White House, if he doesn't win the Senate, then it's going to be gridlock in Washington. Nothing will pass. It's going to be Obama's second term all over again. So it really matters not just who wins the presidency, but also who controls Congress. But having said that, let's lay out different scenarios. The biggest difference between them is that Biden wants to partially reverse some of Trump's corporate tax cuts. Now, if that ever came to be, which I think it's unlikely, but if it ever came to happen, that would be disastrous for the stock market. So in isolation, this would imply that the Biden victory would be bad for stocks. Now, on foreign policy, I believe that Biden might ease some tensions with China. He's not soft on China, but he's definitely softer than Trump. So if he wins, that could lead investors to price in less political volatility, that could boost the Chinese yuan, and also the currencies of nations with high trade exposure to China, like the Australian dollar. Now, the US dollar is trickier. It will all depend, its reaction will really depend on who controls Congress. So, as a simple rule of thumb, a Trump victory might be beneficial for the dollar, but a Biden victory might be harmful for it. Now, having said that, if Biden wins the White House, but he doesn't also flip the Senate, then most of his proposals will be vetoed, so the dollar might not lose much. So in other words, it's really in case of a democratic sweep where Biden takes both the presidency and all of the Congress. That's the only scenario where both stocks and the dollar stand to lose in a big way, in my view.
Marius, thanks so much. And thanks for joining us at XM.com.